One. Boom! There we go, ladies and gents. We're ready to rock and roll on another episode of the Business Bros. What if you could take $30,000 and turn it into I don't know, 5 mil? Would that be interesting to you? That's what we're talking about today. Our guest did exactly that. Let's get this one on the road. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life: prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. All right, ladies and gents, on today's episode, we're going to be talking about the secrets to turning a $30,000 investment into over $5 million in just under 10 years. Our guest has been an active investor since the age of 18 and has a proven track record of success using the principles of information arbitrage in his investing decisions. He'll be sharing his story of overcoming a life of abuse and tragedy, and also discussing his next steps, including growing his mastermind group and raising funds to buy a boutique hotel. So let's welcome to the show the information arbitrage expert himself and investing master, Mr. Joshua Hatter. Now we can start the party, my friend. Welcome to the show.
I love it, man. Thanks. I appreciate it. That's easily the best intro I've ever had in my life.
Well, man, dude, if you ain't having fun while you're podcasting, then why the hell are you doing it?
That's true. I love it, man. I love it. Thank you.
All right, let's jump into this thing, man. The $5 million question. You started off with 30 grand. I guess the first question I would ask is, how'd you get to that 30 grand in the first place? And then how do you just multiply that going forward?
Yeah, that was just a little bit of old-fashioned grinding. So that was a $30,000 401k loan I wound up taking out, which I probably would not recommend. You know, your mom and dad would not recommend you borrowing from the retirement account. But yeah, that's just the saving pennies the old-fashioned way. I was, so like you said, 10 years ago. I'm 41 now, so early 30s when I took that, and just saving the pennies over the course of 10 years is how I got to that.
All right, stacking the chips, working the grind. That's one thing, right? That's one way. You can definitely put money into a tax-deferred account and watch it grow. You took a different risk, and this is where entrepreneurs really take off, right? They take on more financial risk than any other person. What'd you do with that 30K, man? How did you turn it into 5 mil?
Yeah, I mean, I think like unless you really bet on yourself, it's hard to have those exponential returns, right? And so, that was it. You hit the nail on the head. I bet on myself. I bought a piece of property in an urban area where I live, and I kind of rode that the Fed zero interest rate policy over the course of the next 10 years. Real estate was cheap in comparison. You use the phrase information arbitrage in comparison to what the cost of capital was, and just kind of rode that wave for the better course of the last decade or so.
Yeah, that time has come to an end. That Fed interest rates dropping really low was definitely a good time. Money was cheap. You either took advantage of that appraising market with inflation, and then on top of that, low interest rates. Like you got all the ingredients for a perfect cake right there, right? So what happens, man? What's the investment strategy that you decide to go with, and just kind of ride that wave? Was it just multiple properties after that? How did it work out?
Yeah, I mean, a little bit of a few things. So kind of house hacking to begin with. I actually listed my first property on VRBO back in 2012, and it was against the HOA. So that got shut down almost immediately within the first few months, and kind of just pursued some other entrepreneurial things there for a little bit. 2016 started again and listed something February of 2016 on Airbnb for the first time, and got lucky both with the Fed's easy money policy and also the proliferation of Airbnb. You see the hashtag Airbnb bust now, and there's a lot more negative publicity around the supply. So it's a little bit different story now than it was 10 years ago. But yeah, that was really it. I rented out a house or rented out a room in my house, I should say, in 2016, and just been playing Monopoly in real life ever since then.
Dude, sometimes it's the simple strategies that just work best, right? You said that you put that property on BRBO, and then the HOA came and shut you down. And there's always a lesson to be learned when you go into some of these properties. I remember not the first, but the second investment property I bought. I bought this property in Vegas, and we went to this like learn how to invest seminar training, and it was awesome. And I learned all kinds of stuff. I was like, I don't know, 21, 22 years old at the time. Learn all kinds of stuff. And then the last thing they do is they put you in these charter buses, and they're like, who wants to buy this place? And I'm like, hell yeah, right? I end up buying this place, and I realized, oh crap, I can't cash flow this thing. Yeah. Fortunately, I learned a strategy where basically I had somebody who wasn't able to qualify for a loan. It was a rent to own option. I put them in the property. I was able to cash flow, turned it around, turned a negative into a positive. When you went into this property, you had intentions of getting higher rental than you intended to, and the HOA shut you down. What was that like, and how did you overcome that?
Yeah, I mean, I really didn't go into it with that. I think it was more out of necessity. So I actually worked for a Fortune 500 company, and was part of a huge layoff across the company. 700 people got laid off across this company. They were taking one large public company and splitting it into two. So I got laid off with 700 of my friends. And for me, it was just like, okay, let's see if this will work. Give it a shot. I had read a little bit about it back then. Again, this is like 2011, 2012, when this first happened. So, it was kind of a chance at that point. And long before, this is like the days of Tinder, right? So this is like long before a lot of the innovation that's taken place in the short-term rental space since then. And, long before Airbnb was a thing, it was still Air Bed and Breakfast.
So what do you do now? Like now when you acquire a property, I mean, there's a lot of people who are looking into Airbnbs because the rents could be significantly higher. Of course, there's all the overhead that goes along with it. You got to turn over the property. You got to make sure you have people who go in and clean the place, get it ready for the next person. But you could potentially make a lot more money on that kind of rental versus a traditional long-term lease. What are you doing with your properties today?
Yeah. So things have changed. I still think the returns are better in short-term rentals. But personally, I actually kind of fell into an actual bed and breakfast back October of last year. So bought our first one April 7th. I say I took on a business partner with my last short-term rental deal. We actually sold that and flipped it into our second bed and breakfast at the end of 2022. But yeah, so he's actually a home builder, and he specializes in historic home reservation or renovations, I should say. I'm in Charleston, South Carolina, so old coastal town, predates the U.S. We had the property we actually closed on in December was built in 1798, so it has 1798 problems, I like to say. But the things that scared me on the renovation side before partnering with this guy just don't anymore. So I've got a management company. He has a renovation company. And so it's kind of the perfect marriage as far as the banks are concerned. But that's really the direction that I'm headed from short-term rentals is toward bed and breakfast. Again, because I feel like there's more information to arbitrage there. And so, even though the cost of capital has doubled, rates are effectively double what they were a year ago. I still feel like the opportunity that's in the actual bed and breakfast space on the way to boutique hotels is where we're headed. But I feel like the opportunity that's there in that asset class is the same thing that we saw 10 years ago in Airbnbs.
Yeah, people want to have that different experience, right? Everything's got to be Instagrammable, first of all. And I think a bed and breakfast really adds to the ambiance of I'm getting away with whatever it is. I'm on vacation, check out this whole experience. That's kind of the vibe that I feel that a lot of people are leaning towards. That's one of the attractive things about an Airbnb. It's this specific one with this particular view or with this back wall drop or whatever it is. It's that experience that people are going after. Now, you mentioned that there's more information arbitrage in that space. What do you mean by information arbitrage? What does that mean for you and your industry?
Sure. Yeah. So to me, it's taking a piece of information that's not that well known and trying to make exponential the return you might otherwise get. And so kind of mitigating your risk if you believe in your thesis. And so my thesis 10 years ago was that there was money in short-term rentals, right? And 10 years ago, when I got into the asset class, my old college buddies would literally laugh in my face, right? Like, you're doing what? You're renting a room out of your house, having coffee with somebody walking downstairs. Like, what does that look like? And knowing what that feels like now, I didn't know it at the time, right? At the time, like, oh, it hurts my feelings, right? And where's that really coming from? It's a projection of jealousy. I wish I could do the same thing. I don't understand it, right? So there's a few things that are the cause of that. But at the time, you're just like, oh, this guy's hurting my feelings. I'm just trying to make this work. But having gone through that for a whole cycle, and then now kind of being at this point where I feel like there's just as many people making money selling the dream as there are actually executing it in the Airbnb market. When I moved now to kind of information arbitrage in the actual bed and breakfast space, I'm kind of seeing a similar thing. So, most of these places, and I don't mean this derogatory, but they kind of look like grandma's house, right? So you walk in and you got the 4-poster bed and the doily curtains, and it's just they haven't been redesigned in 30 to 50 years, depending on the ownership structure, and certainly in need of renovations. Most of them are historic homes, and to your point, people want an experience, right? So they want to be in that historic home, but they don't want to feel like they're in a dated home. They want to have that experience while they're there, and they want it to be in a good location, but they also don't want to be staying in grandma's house, for lack of a better word.
Very true, very true. One of my favorite movies of all time, Forrest Gump. That's what Mama said, right? Mama had a bed and breakfast going on there. And it's funny that you said your friends would laugh at you, because one of the things I like to say is at first they laugh at you, then they ask you for advice, right? When I first started the podcast, they were like, "You're going to start a podcast? What are you going to call it? Whatever." Now 1,000+ episodes in, and it's monetizing, and it's a thing. They're like, "Oh, how do you do that?" It's funny how that works. It comes complete full circle. You don't let anybody deter you. You just realize that when they're laughing and complaining or saying what you can't do, it's really just a projection of what they're saying. So what are they telling you now? Now that you're in it, you fast forwarded past, waking up in the morning and having somebody at the kitchen table with you. What are they saying today?
Yeah, I mean, so like when you look back at the short-term rental stuff, I mean, I would consider myself an expert in the asset class now at this point. I've been evaluating those investments and been super successful over the last decade. So, yeah, I mean, now it's much more advice, right? Like, what do you think of this deal? I mean, I had a property sell from a client on my property management side through that company, and I had somebody contact me like, "Hey, can you check my spreadsheet out?" And I, looked at it, and he's showing a 6.4% cash on cash return, and inflation at the time was at 8%, right? So it's like one of those things, like, now people are reaching for that asset class, right? Like, you don't even understand it well enough to know you're taking risks coming off of COVID, and you're not even outpacing inflation with the rate of return that you're expecting, despite having good analysis, right? Still wanting to buy the property. So it's interesting having watched things kind of come full circle. And now I'm kind of seeing the same thing with the asset class that we're entering, for sure.
So what makes for a good bed and breakfast? What are some of the qualities that you're looking for in a building that you end up buying? Does it have to require a lot of renovation, or are there certain things that you look for when you're entering some of these deals?
Yeah, I think, so we definitely look at the P&L, the profit and loss for the last 3 years, just like the banks would. We need to understand the potential value add opportunity between my property management company and then also my renovation partner. So, yeah, I mean, I would love to, the more grandma the place looks, the better for me, right? If you walk in and you're like, "Oh my God," like that's, to me, that's the perfect reaction. I mean, that means we have the perfect value add opportunity now that we've done this a couple of times. So, frankly, we're at the point where we're starting to evaluate half a dozen different cities in the Southeast for the same types of information arbitrage opportunity.
All right, let me ask you this, because at least in California, we have residential properties and we have commercial properties. Residential goes up to 4 units. Commercial is above that. And when you start to look at different properties and evaluating them differently, for example, a residential property, you're going to look at comparables when you're going to sell, versus a commercial property, you're looking at the P&L and what this thing is actually going to bring, because that actually determines the value of a commercial property. When you're looking at these bed and breakfasts, are they classified as residential and you're operating as a commercial? How do you, is there like a difference in this
No,
type of
no,
thing? Because I
it's
know.
just to your point, like it's totally based on the revenue, right? So, that's the beauty of it. If I'm looking at, for instance, the first one we bought, the average daily rate, the ADR was 165 for the previous 12 months. And most of these people are self-managing, right? And so they're probably not using dynamic pricing, which is a huge deal. They're running at super high occupancies, which is great, except you probably can make more money on less turnover if you just know how to balance occupancy with rate. So that's kind of what we've seen for the first couple. So I mentioned the first one was 165. We ran it for 7 months before we shut it down for renovations. And just in that 7 months, the only thing we did was add breakfast back in because they weren't even serving that despite having the permit, and just optimizing the rate management, no changes to the property whatsoever. And in that 7 months, our average daily rate was 39% higher at 229. So, that's before even putting in a single dollar to renovate. So, it's really kind of the uglier the better, if you will. And you're looking for really good locations and properties with good bones. And a lot of these old historic properties have amazing bones. And to your point, like it depends on the municipality you're in too, right? So, I'm in an old historic city. There's a lot of regulations. You've got to make sure you have the right permits. It's got to be zoned properly. If not, you have to have a zoning exemption. So, that's a whole process in and of itself that you have to go through during the due diligence phase to make sure that you're buying an asset you can still maximize the return on investment with.
All right, so you got my attention. I'm like, okay, this is definitely an asset class that can have a great return. You even have like a golden partner that's helping you out, basically substituting your weaknesses with their strengths, which is a perfect type of partnership that you want.
Thanks, Cameron
So,
O'Connor.
so does that mean like you're doing this all for yourself, or are you teaching others to do this as well?
Yeah, I mean that's kind of why I'm starting the mastermind. Like I said, I consider myself an expert in the short-term rental space now. I want to bring people along with me. I mean, you mentioned in my intro, I've got a terrible background. So, 41, I've made enough mistakes in my life to appreciate where I am, but also have had the good fortune to have been right much larger than I've been wrong. And so I kind of want to, bring people along for this ride. So, my business partner is the first person that I've made a significant amount of money for. We actually added a second guy to our last bed and breakfast deal. But yeah, that's now at this point, I'm trying to teach people how to better evaluate these investments, how to maximize what they have on the short-term rental side, but then also looking to raise capital to buy more of these B&Bs.
So tell me about the mastermind. What can I expect in this thing? Am I going to show up on a Zoom and you're going to kind of go through a prospective property? Are you going to help me with like terminology and analyzing numbers? Are we going to like syndicate here and work on a deal together? What happens in this mastermind?
I would say all of the above, but I think the most important thing I've learned is the importance of mindset. And particularly like in the last 6 months of the last year or so, I would say, I recognized how much I was continuing to limit myself. And so I think like that's such a huge thing with life. And if you want to limit yourself, that's fine. If you're happy where you're at. But it continues to amaze me. I mean, even just this morning with somebody's just kind of running through a potential business scenario, and one of the guys is like, hey, well, why don't you buy this whole company? And it's, yeah, there's still like, I just, it amazes me how much I still limit myself, even at this point. And so like, I feel like I've learned a thing or two, and I can bring that mindset. So revolutionary mindset is the name of the mastermind. I feel like I can kind of bring that mindset to some folks, and, kind of help people get out of their own way a little bit in the same way that I've been in my way a lot of my adult life.
Yeah, that imposter syndrome is no joke, dude. I mean,
For sure.
it gets in your way more often than you think. I always find it funny. I saw this like post, and it was like, I get up in the morning and, I go to the gym and this person's yelling at me, telling me all this stuff. Like it just describes like the most horrible person that ever could be around. And then at the end, the punchline is like, that's what you said to yourself in your head all the time. Like we are our biggest critics at all times. And we're trying to move, this this entire boulder up a mountain at the same time we're like letting it roll back on ourselves. So that's huge. I totally agree with you that mindset is got to be 100% there. The other side of that is I'm ready to invest, right? And so who's this ideal person that you're looking for as far as people that are eligible to be part of this mastermind, people eligible to be part of this investment?
Yeah, I mean, on the investment side, it's it's your normal accredited investor, right? So you got your net worth minimums and your income minimums in order to be an accredited investor, and we'll be raising our first fund later this year to just buy more of these B&Bs. I think there's an opportunity to really roll them up. There's about a half a dozen cities in the Southeast that we've started analyzing deals for, and we've got our first 6 outside of where I live. That we're really doing a deep dive on, and we'll be visiting those cities in the next couple of months. So that's kind of the next phase for us is doing a fundraise and buying a handful more of these across the Southeast in the US.
What kind of capital are we looking at? Minimum investment?
Minimum investment is $100,000. So that's kind of the baseline. We'll obviously take more than that. I'd much prefer to have a few key partners, but like I said, I want to kind of bring folks along too. So if people can meet that minimum investment, then we're happy to open up the fund for that.
Sweet, man. All right. Well, how about the flip side of this? Now we're in a downward spiral here when it comes to real estate. Some of the fun stuff is, your neighbor wants to sell before the market dips, so he undercuts the market, and then now that's a comparable. So the next guy can't sell for as high because that's going to undercut. And money's a lot more expensive today than it was just a year ago. So how is that affecting you, especially when you're talking to investors and you're like, hey, real estate's the place to be? And they're looking at the news going, I don't know, man, it's kind of scary.
Yeah, it's a great point actually. But you really you touched on it earlier, right? These commercial deals are based on the P&L, not just the valuation of the real estate themselves, right? So if you're taking this piece of property that you have this value add opportunity for, both from the management side and just the aesthetics, in order to increase the average daily rate, you still have an opportunity there. So you're still going to be increasing the revenue. So the overall value of the property is still going to increase. Kind of my line now, and my bank loves this, but my line now is if interest rates doubling make your deal a bad deal, then it was probably a bad deal to begin with. So we don't operate on margins of safety that are so small that a few points of interest would kill them. The arbitrage opportunity is much larger than that in this asset class. So it's just a different game, I think.
And I'd imagine that when you're raising capital like this, it makes it a lot easier to get the funding that you're looking for. You probably get better rates based on the property value itself. You can almost self-fund if you needed to get this stuff underway, which kind of gives you the opportunity to really kind of leverage that cash, right?
Yeah, for sure. So the first couple deals we self-funded. Is always important to have. I'm a big data nerd, right? So it's always important to have that data. I certainly would not take anybody else's money if I didn't think that I could do the exact same thing, if not better, with their dollar that I do with my own. And so it was important for me to kind of prove out this thesis. And so that's kind of where we're at now. We did it a couple of times where I live, and now just kind of looking to expand using the exact same thesis.
You think a bed and breakfast is like is a business that is like geographically stronger? Like you mentioned that you're in Charleston, South Carolina. Is that like a thing there versus maybe doing some in Florida or maybe in California? I mean, I imagine California prices are ridiculous because I live here. I know, but like is that something where you're sticking to certain geographical areas?
Yeah, I mean, we're starting in the Southeast, just like you said, that's where we are, right? So it's your normal Savannah, Asheville, the kind of the coast there. I think what's almost kind of comical, really, the more we do this research, it's almost like there's this like crappy bed and breakfast kit. It's like the same vendors, like the same webmaster. I mean, you look at these things. we came across one in Florida, and it's like the exact same layout of the one we just bought online, right? And it's the same like grandma feel. It's like literally the same pottery contractor they use for the little coffee mug that comes with the logo on it, right? So it's almost kind of laughable, the opportunity that you see across some of these. Now that's not to say that it exists all across the U.S. But the more we dive into it and the more we look at these websites, it's almost like, this cookie cutter, I own a B&B. Here's the webmaster I use and the vendors I use. It's the same upsell packages, all that kind of stuff. Same look and feel, everything. So it's interesting. I mean, we're kind of going for a slightly different target demographic. And that's really, I think, where I thought the risk was with the first couple. We're not going for your I mentioned grandma's house. We're not going for grandma and grandpa, right? So it's a little bit more technology forward, post-COVID era, 25 to 45-year-old that wants to stay still in a great location in a historic property, but also wants the modern amenities that they're used to. So a little bit different.
What kind of trend are you seeing? Are you seeing, I mean, you mentioned the 25 to 45 age group. Are they staying like, over a weekend, or are you seeing like where they book out like week or two in advance? Because I'd imagine today, like especially in a post-COVID world, you can work from anywhere. So if you have the ability to go to some of these places, it's like, I know people who are literally traveling city to city. They'll go to a city for like 3 months and live there. Like, yeah, it was cool. And then they'll go find another spot somewhere else. Are you seeing longer term rentals or short term stuff when it comes to this type of industry?
Yeah, I mean, it really is short term. I mean, our average stay is less than 3 days at these bed and breakfasts. It's funny that you mentioned that. Like I mentioned my buddy just kind of asking me, "Hey, why don't you buy the whole company this morning?" He's like literally living in South Africa right now in Cape Town while he launches a concept, and stayed in an Airbnb for a couple months in the Hollywood Hills before that, right? So, that definitely exists, and quite frankly, having made it through a global pandemic, that's how we survived. As soon as places opened back up again, you had people that were staying from other parts of the country where they were just much more restricted and they wanted to be able to go out and live their lives. So, anywhere from like 2 weeks all the way to 4 months, we would do kind of like short, really like almost short-term leases, but much longer stays than normal. And now we're kind of back to normal. So it's mostly your 3 days and under. You get it, a week every once in a while, but every once in a while, somebody will try to cut a deal for a month. But it's much, much more normal now than it was 2 years ago.
Hey man, if you're providing breakfast, it's almost like mama's cooking. You know what I mean? Like, yeah, of course I want to stay a little bit longer. You're going to provide everything I need in the morning. That's perfect. All right, Josh, man, we're getting low on time. I want to make sure, I know you kind of mentioned it throughout the show, but how do people get a hold of you? If they want to work with you, they want to find out more about the mastermind, they want to just ask you a general question, how can they do that?
Yes, my website is joshhatter.com at the bottom of your screen there. People can actually go and schedule time to chat with me on my calendar through that website. So if you go on there in the upper right corner, you can actually schedule a time to chat. You'll also get the pop-up if you want to be added to our email list, or if you have any interest in the mastermind. But I'm an open book, man. My door is always open. I really love talking to people. And so, if people want to go and book 30 minutes with me, I'm all ears. I love to talk.
Boom, that's it, ladies and gents. Look, there's so many, like, this is real estate, right? But this is just a small niche in the real estate industry. And each one of these niches could be so lucrative if you find the right mentor out there who's already doing it, especially when that mentor has other partners to really enhance the ability of success when it comes to your investment. So make sure you guys check it out, joshhatter.com, joshhatter.com. And just so we all know, for those of you listening, joshhatter.com. And Josh, one more thing before we head out, man. Todd hooked you up, put you on the podcast. Great dude, and I know you're going on multiple podcasts. And I gotta ask you a question, man. What was your experience like on the Business Bros?
You're amazing. Seriously, like the energy. This is easily, and hopefully nobody else will kick me for saying this, but this is easily the best one I've been on so far. So I really appreciate the opportunity. I know you guys are crushing it, and just thank you for having me.
course, man. It makes it easy when you got cool stuff that you do, man. I'm telling you, I wouldn't even never have thought of the bed and breakfast space. And the only time I ever seen it really was on the Forrest Gump side. I don't think I've done it myself yet, but it's definitely now in my. Now
You come to Charleston, man. You let me know. I will give you a place to stay. Come on.
I'm down with that, dude. Thanks a lot, man. All right, ladies and gents. Oh, Josh, before we head out, man, any last thoughts before we close out?
No, I've just, thanks for your time. Time's the one asset you can't buy. You can never get it back. You can't recreate it. So thank you, everybody, for listening.
Of course. All right, ladies and gents. You want to get into real estate? Here's an aspect that you guys can definitely check out. Make sure you guys go to joshhatter.com, joshhatter.com. We'll catch you guys on the next one. Peace. And we're out.
It's over. Go home. Is your business in need of marketing?
Like,
Try starting a podcast. But not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.businessbros.biz to get started today.